PNB is higher in today's trading session, holding with a gain of around 2.5%. There was a disclosure on the exchanges, and in fact, they are talking about a corrective action plan. Lata is with us. Lata, run us through those details.
Well, first, a lot of PSU banks are up, and that's largely because bond yields have fallen because of the fall in crude prices. When bond prices rise, banks make money on their mark-to-market gains. So that's helping all banks. I'm saying this as a preface because the plan that the government has put in need not necessarily push up the PNB stock, but it is overall positive. Now, the point is PNB, given its March 31st numbers, is in danger of coming under Reserve Bank's prompt corrective action. Actually, risk threshold 2. There is a risk threshold 1 and a risk threshold 2. When your losses are higher and your capital is lower, you go to risk threshold 2 actually, and that's what PNB qualifies. Its capital adequacy, if it is below 10.8% but above 8%, it qualifies as risk threshold 1, and if it is even below 8%, it qualifies as risk threshold 2. That's where PNB's current capital adequacy is. It's, I think, at about 9.2. Likewise, net NPA, if it is between 6 and 9, it's risk threshold 1. If it is between 9 and 12, it is risk threshold 2. PNB's net NPA is 11.6, so it actually qualifies. And that is why the government has put, the bank has put this plan to pull back from all these uncomfortable ratios. Now, the first plan that they are saying that they are going to adhere to is that the capital adequacy ratio will be brought to 10.3%. The first element in that will be that the government will infuse capital. It has said so with, recap bonds plus its own money by about 5,133 crore. That is the expectation. With other things in place, they expect the CET ratio, the common equity capital ratio, to rise to 7.23% against the current 5%, 5.95%. They also expect the net NPA to fall to 5.96% from the current 11.6. Now, why do they expect the net NPA to fall? Both the fall in the net NPA and the rise in capital are because of the following steps that they intend to take. First is that they expect more profit because they will recover more cash from the NPAs. Simply go and seize land, seize property of those who have defaulted. They expect 16,300 crore by way of recoveries against the last quarter's 4,400 crore. They expect operating profit to improve to 3,600 crores and further to 21,000 crores in the full FY19. In the June quarter, of course, it will be a net loss, although it may be an operating profit. It is expected to be a net loss. But by the first half, they expect to return to profit. That is by the second quarter. So the target of the gross NPA is expected to come down from 86,000 crore currently to 65,000 crore. Now, in this, their big help will come from the assets that are getting resolved in the NCLT. Remember, there's Bhushan Steel, Bhushan Power, SR. All of them, when Tata Steel paid back the money for Bhushan. Likewise, they're expecting monies to be paid back by Vedanta or whoever finally wins Electro Steel. So that money is expected to fetch them about 17,000 crore. There are 30,000 crore. They won't get the entire money back, but they'll get back 17,000 crore. So that will bring down the gross NPA number. And then, of course, they expect to monetize non-core assets. They have a whole host of assets. Of course, the most famous is PNB Housing, but they also have holdings in NSC, in several credit rating agencies. They hold UTI. UTI Mutual Fund is held by several banks other than T-Row. So they are expecting to monetize that by the fourth quarter, hopefully if UTI lists. So all that is expected to bring some money. Plus, they are expecting to restrict their advances. All PCA banks have to restrict their advances. So they will restrict their risky advances, as also cut operating expenses by freezing all fresh recruitment, rationalize branches, shut unprofitable ATMs, and thereby achieve a higher ROA. It remains to be seen how much will succeed. All freezing of recruitment is not good. Sometimes you will need fresh recruitment either to protect the company from cyber problems or to bring advanced technological solutions to problems of fraud and leakages. But anyway, this is the plan that they have announced to bring the company out of the PCA parameters.
And get the gross NPA to below 6% by FY19.
Yeah, just one more addition. This is a story broken by my colleague Sapna Das from Delhi. She's unwell and I'm merely presenting her points.
Thank you.